Everybody's talking about silver, gold, the precious metals. So what are we going to do? We're going to talk about oil. So much happening in the oil market that nobody's talking about. And net gas. We're going to look at net gas today. We're going to warning sign. I'm going to show you a chart that you need to know, actually two serious warning signs. A catch-up trade in the oil sector that nobody's talking about right now. And a chart. Boy, you need to know this chart, because when you know this chart, you know what very likely will happen in the oil stocks in 2026. It's a really good show. Let's get into it. Welcome to Hot Trades of the Day, your show for swing trading ideas for the coming days, weeks, and month. So first off, apologies for not having a video yesterday. I was traveling yesterday. As you can see in the background, I'm back at the Casa de Daniel. However, if you've seen the video that I put out over the weekend on silver and my long-term price target, and the emphasis is on the word long and long-term, then I think you got some really good value. And let me add something to this. And if you haven't seen this video, go back and watch it and hit the subscribe button so you don't miss videos like this. The price target I gave in this video, I know it sounds a little crazy. I explained to you why I think silver will get to that point. But that doesn't mean that that is where the price will be. That'll be the tippy top of the silver bull run. And then from there, I would expect a 70% correction. And that will be the new price equilibrium then. But hey, if we can still sell somewhere near the tippy top, we sit pretty. Now, let's get into a sector where we also sit really pretty, because we were on this thing early. It's the energy trade, it's oil, it's the oil companies, it's oil services. If you followed Hot Trades of the Day, we were in this thing way ahead of the market. And if I look at my portfolio, this is where I made my biggest gains in 2026. But lots of signals happening right now. So let's start with crude oil, WTI. It's looking better and better. We already know the macro double bottom formation that I pointed out quite early. We broke the 50, the purple line. We broke the 200, the golden line. We broke the downtrend that has been in place since 2023. All fantastic. Now, as I told you before, it was all about let's build out structure above the 200, above the downtrend, above this resistance zone, so we don't get a scenario like we had here, which this is a little bit artificial because that was the Israel attack on Iran. But here and here, where we spiked above the 200 and the downtrend, but then broke right back below it. Here, spiked above the 200 and downtrend, then broke down right below it. And now look at this. We spiked up over the 200 and the downtrend, and now we're consolidating above both of these indicators and the now support zone. That, ladies and gentlemen, is bullish structure that's developing. The selling pressure is gone clearly in the oil price. On the upside, we have the chance that the oil price might spike if, for example, the US attacks Iran. This is very positive. So this is a really positive development that nobody's talking about. Again, will I trade the oil price? I will not. I'm not the least bit interested in the oil price. Well, I am, because I'm invested in the energy sector, but I'm not interested in a trade. I'm interested in the oil stocks because that's where the real action is going to be. I've talked about it many times before. The oil stocks can appreciate much more than the oil price, and that has paid off so far. Again, hit the subscribe button so you don't miss videos where I talked about this in the past, as far back as last fall, when nobody was interested in energy stocks. Man, we had great buying opportunities then. So, however, some of the energy stocks are starting to get a little long in the tooth short term. And we obviously have to go to the superstar, which is Exxon Mobile. And it looks great. There's absolutely no denying that. But if you look at this chart objectively, and let me zoom out for you a little bit. Here's the diamond formation that I pointed out. And while we're still in it, I was telling you, hey, the direction we break out, we're going to get a big move. Well, boy, did we get a big move in Exxon Mobile. But if I say, as I did in the video 2 days before the silver crash, where I warned to take some profits in silver, gold, and the mining stocks, that nothing goes up forever, we have to say the same thing about Exxon Mobile. I mean, if we look at this chart objectively, this is Exxon Mobile. This is not a quantum stock, a space stock. This is not some small mining company. This is a heavyweight. This is a huge move for Exxon Mobile. Now, I told you in the past, moves like this are going to happen because nobody's invested in it. Did I expect it to happen this fast? No, I'll just want to be honest with you. Look at the 50-day. Look at the whole time we're in the diamond formation. The stock price was always close to the 50, and look how far away we are from the 50 now. Look at the RSI and compare it to RSIs in the past, and you can see very clearly that we have reached a level that we basically reached twice since 2022. Here, we had clearly marked the top, and then we got a correction. And then here, we got a small correction, and then went back up. And I think this is what we're going to look at here in 2022. We're in this kind of move for Exxon Mobile. But if you're long Exxon Mobile, if you're sitting on great profits, if you're maybe have some options on Exxon Mobile, you might want to consider taking some profits. You're never going to hit the absolute top. You're just going to sell some on the way up to pay yourself to take some gains off the table. If you're a long-term investor and you just have the stock and you don't need money and you can ride it out, fine. I think what's going to happen is if the tech markets calms down now, and we're seeing first signs of turnaround in Microsoft, for example, at least short term. This week we're going to get a lot of reports from a lot of the high growth stocks, so we'll see how they're doing. ARK looks terrible, the ETF, I'll talk about that in a video probably tomorrow. But if the tech sector settles down, I can see money shifting back into the bombed out sector like software, like the Max 7s, and then energy taking a breather, which I love because here comes the German with the big Mercedes truck, beep, 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 backing up the truck to buy all the energy stocks because it looks great. But don't be surprised if a stock like Exxon Mobile gonna come down quite a bit for an Exxon Mobile stock. We're not talking 20% correction or so. But if you ask me, I can easily see the stock coming back into this structure right here. So, and then we're still way far off from the 50. It would be healthier if we get closer to the 50. But again, as we've seen with gold and gold stocks in the past, if you have a breakout like this, it can take a long time until the stock or the commodity really comes back to the 50. So we're talking 5, 8, 10% correction in the stock. If you're a long-term holder, that's nothing that worries you. You might even add to the position then. But again, if you have options, that's a big thing. If you're leveraged in the market, you might want to take some profits. This also goes for some of the oil services. Look at Transocean. I love this stock. Man, this looks great. I think we talked about Transocean here on the channel around 450, 460 something. Somewhere in this range here. And you are sitting on fantastic gains. This is a great looking chart. Absolutely. But this might also take a short-term breather. Now, would I sell it? I personally would not, because look at this chart. It looks great. And look at the room it has to run. There's going to be a lot more fun to be had in Transocean. But again, short-term, we could see some profit taking here. And if you're leveraged in the energy sector, which I don't support that, but I can't blame you, then you might want to take some profits, because there might be a period coming that I see. Again, it's a combination of tech stabilizing. So you keep an eye on the tech sector. Is it stabilizing? And then on the other hand, what's the energy sector doing? It's very obvious that people are just climbing over each other trying to get into the energy sector. But that's usually the time when the market steps back and corrects, fools a lot of people, right? They got in the higher prices, then the market corrects. Now high tech is going to think, oh, I'm in the wrong sector. They sell at a loss, they switch to high tech, and then energy rips and they're not in it. So we're not doing this mistake. But if you want an oil service stock that I love, look at Kinder Morgan. I've recommended Kinder Morgan, talked about it here for a long time. Stock has done great. And it looks very healthy. Compare this chart to Exxon Mobile, this looks way better, because we always have these consolidation phases here, and we just had, as you can see, a bull flag that we broke out of yesterday, big time. And if I show you the long-term picture, you see why I think that Kinder Morgan is quite interesting to get in on weakness. Now, you may say, oh no, double top danger. Ooh, we're near the highs of 2025. Shock horror. Well, how about we zoom out a little bit and see what's really going on, see the action. And you can see, since the IPO, this upper long yellow zone, that's a big time zone. All right, and the stock will have, it'll take a while to power its way through there, I would assume. But when we do, that is when the majority of the market will start to get in on Kinder Morgan, and then we're going to run and look at the room we have. All right, we're talking around $44.50 to the all-time highest. And we're already in it. Maybe I am. Or we will have a chance to buy, because there's always a chance that we're going to get short-term pullbacks, especially after if we doink off a big-time resistance zone like this. But Kinder Morgan looks great. So if you miss Transocean and you said, I really want to be in the oil services, put Kinder Morgan on your watch list. This is one of my favorites for sure. And I really like Transocean. I'm not in Transocean. I wish I was, but I missed my limit. Very close. So if I get a pullback there, I'll be clapping my hands and I'll be happy. But here's a chart I want to point out to leave you with that nobody's talking about for an oil company. Oh, but before, quick detour. Got to talk about nat gas. Now, I don't talk about nat gas a lot because I don't trade nat gas. Why? Because it's called the Widowmaker. And nothing, absolutely nothing, showed this better than this craziness who basically made widows out of husbands that are now dead, that were short in in nat gas in the beginning of the year, and then again of the ex-husbands that were long nat gas around the end of January. Boy, nat gas is brutal. I made a lot of money. I lost a lot of money. And my lesson that I learned from these adventures that I could have lived a happy life without is I'm not touching nat gas at all anymore. You guys have your fun. I'm investing in other sectors. But if you are interested in nat gas, we are at a very interesting point because, as you can see, we're at the low end of the uptrend channel that has been in place and has successfully held here, 2 times here, and last time again middle of January, which then led to the big short squeeze, again also with the winter. Obviously the winter breakout in the northeast of the US. And as you can see, we are right at the bottom, and we can see the selling pressure is fading off. This is quite an interesting setup. It's not for me, but I just wanted to show it to you. If you have the cojones for it, could be an interesting setup. Now, on to the oil stock. We know Exxon has run. We know Chevron and ConocoPhillips look great. Here's ConocoPhillips breaking out. Yummy. Love this stock. Looks great. Chevron looks great. But the one that hasn't done really anything is Occidental Petroleum, the Buffett oil stock. Look at this. It's still far, far below the resistance zone from the bottoming phase. But we are above the 200. We are above the 50. They're pointing up. There is clearly dynamic developing in Occidental. And this could be the catch-up trade in the oil stocks that nobody's talking about right now. Everybody's focused on the big 3 and the oil services. But I really like this setup. This is basically the exact setup where we got into Conoco and Chevron that we really like, that we like with oil services like Transocean, and I showed you earlier, is basically I'm Marty McFly with a skateboard in Back to the Future, taking us back to last fall when these charts looked exactly like Transocean, that Occidental looks today. So I'm interested in Occidental on any weakness. I do like that we made a higher low, so we haven't made a higher high yet, right? That would have to happen in order to confirm this bullish trend, but that would mean that the higher high would already be above this resistance zone. So this is going to be really interesting. If you miss the oil stocks, if you miss the oil rally, first thing, I don't know what you have been doing, but because we've been making money here on Hot Trades of the Day with it, but Occidental might very well be a really, really juicy catch-up trade. Because if they break out, plus the Buffett factor, everybody's going to jump on this stock. So maybe that's something for you to put on your watch list in weakness. This could be interesting short-term weakness, this is. And that's it for today. I wish you a great day. We see us tomorrow. Talk to you later. Bye-bye.